Hi, in this video we will be talking about how to build wealth. Watch this video to the end to learn Robert Kiyosaki's money lessons. Welcome back to the International CEO. Robert Kiyosaki, author of the renowned book, Rich Dad Poor Dad, offers profound insights into building wealth, diverging significantly from conventional financial wisdom. Central to his philosophy is the distinction between assets and liabilities. Kiyosaki encourages investing in assets that generate income, like real estate, stocks, and bonds, rather than liabilities that drain resources, like luxury items and consumer debt. He emphasizes financial education as a key to unlocking wealth, advocating for self-education on investing, real estate, and entrepreneurship over traditional employment. According to Kiyosaki, working for a salary without acquiring assets leads to a financial trap where expenses often rise with income, known as the rat race. Kiyosaki also highlights the importance of creating multiple income streams beyond a primary job. Passive income, or earnings from investments, is seen as critical to achieving financial independence. By understanding and leveraging tax laws, one can protect wealth and invest more efficiently. Lastly, Kiyosaki's lessons stress the power of mindset. He believes that a shift from a scarcity mentality to one of abundance and possibility is vital. This involves taking calculated risks, learning from failures, and persistently pursuing financial education and growth opportunities. Robert Kiyosaki, through his best-selling book, Rich Dad Poor Dad, and subsequent works, has significantly influenced the field of personal finance and wealth building. His approach, often considered unconventional, revolves around a series of core principles and strategies aimed at achieving financial independence and wealth. This detailed exploration delves into Kiyosaki's financial wisdom, dissecting key lessons and their practical applications. Understanding assets and liabilities. At the heart of Kiyosaki's philosophy is the fundamental distinction between assets and liabilities. An asset, as defined by Kiyosaki, is anything that puts money into your pocket, such as investments in stocks, bonds, real estate, or a business. In contrast, a liability is anything that takes money out of your pocket, such as a new car, a large house with hefty mortgage payments, or high-interest credit card debt. This distinction challenges the conventional view of wealth, which often equates it with high income and ownership of expensive items. Kiyosaki argues that true wealth is not about how much money you earn but how much you keep and how hard that money works for you. Building wealth, therefore, involves accumulating assets that generate passive income, ultimately surpassing your expenses and leading to financial freedom. Financial education, the key to unlocking wealth. Kiyosaki places a strong emphasis on financial education. He criticizes the traditional education system for neglecting to teach students about money management, investing, and the mechanics of wealth building. To counteract this, he advocates for self-education, encouraging individuals to read books, attend seminars, and seek mentors who can teach them about finance and investing. This self-driven approach to learning is intended to empower individuals to make informed decisions about their money, recognize opportunities for income generation, and understand the risks involved in various investments. Kiyosaki frequently shares insights from his own experiences and those of his mentors, illustrating the practical application of financial concepts in real-life scenarios. The importance of creating multiple streams of income. Another cornerstone of Kiyosaki's philosophy is the creation of multiple income streams. Beyond just earning a salary from a job, he suggests looking for opportunities to generate passive income through investments, rental properties, royalties, and profits from business ventures. This diversification of income sources can provide financial security and resilience, reducing dependence on a single paycheck. Kiyosaki's own journey to wealth included investments in real estate and small businesses, as well as income from his books and speaking engagements. He encourages others to explore their passions and talents, identifying niches where they can create value and earn money. Leveraging debt and taxes. Contrary to the common advice to avoid debt, Kiyosaki distinguishes between good debt and bad debt. Good debt is used to purchase assets that increase in value or generate income, such as a loan for a rental property. Bad debt, on the other hand, finances liabilities that depreciate or have no potential to generate income. Kiyosaki also educates his readers on the advantages of understanding tax laws. By structuring investments and businesses wisely, individuals can minimize their tax liabilities and keep more of their earnings. This knowledge enables investors to leverage government incentives designed to promote economic activities, such as real estate development and small business growth. mindset and attitude towards risk. A significant portion of Kiyosaki's teachings revolves around the mindset and psychological aspects of wealth building. He believes that fear and skepticism often hold people back from taking the necessary steps to achieve financial independence. Overcoming these mental barriers requires a shift from a scarcity mindset to one of abundance, where risks are seen as opportunities for growth. Kiyosaki encourages a proactive approach to learning from failures and setbacks, viewing them as valuable lessons rather than discouragements. He advocates for calculated risk-taking, emphasizing the importance of due diligence and informed decision-making in all financial endeavors. Criticisms and controversies. While Kiyosaki's teachings have inspired many to pursue financial independence, they have also attracted criticism. Skeptics argue that his strategies may not be suitable for everyone, particularly those with limited financial resources or aversion to risk. Critics also point out the potential conflicts of interest in Kiyosaki's promotion of his educational products and seminars. Moreover, the success of Kiyosaki's real estate strategies, heavily reliant on market timing and leverage, may not be replicable in different economic conditions. His endorsement of network marketing and other business ventures has also been controversial. In sum, Kiyosaki's legacy is not just in the wealth accumulated by his followers, but in the shift towards a more empowered and proactive approach to personal finance. His lessons remind us that financial freedom is achievable, not through the pursuit of high income alone, but through the intelligent management of our resources and the relentless pursuit of financial education. The role of entrepreneurship in wealth building. One of Robert Kiyosaki's key tenets is the encouragement towards entrepreneurship as a vehicle for wealth creation. He often contrasts the mindset of an employee working for a salary with that of an entrepreneur seeking to build a business that generates passive income. For Kiyosaki, entrepreneurship is not just about starting a business, it's about adopting a mindset that seeks opportunities for creating value and leveraging systems and people to generate wealth. This approach necessitates a departure from the safety of a regular paycheck and entering the realm of calculated risks and innovation. Entrepreneurship, according to Kiyosaki, allows individuals to tap into their unique strengths and passions, creating businesses that solve problems and meet the needs of their customers. This path can lead to significant financial rewards, as well as personal fulfillment. However, it requires resilience, adaptability, and a willingness to learn from failures, a stark contrast to the security many seek in traditional employment. Diversification and risk management. Diversification is another cornerstone of Kiyosaki's strategy for wealth building. He argues that spreading investments across various asset classes can mitigate risk and increase the chances of achieving financial success. While real estate and the stock market are often highlighted in his work, Kiyosaki also suggests looking into commodities, precious metals, and even intellectual property as potential income sources. This diversification extends beyond just investments, it also applies to income streams. By having multiple sources of income, individuals can protect themselves against economic downturns and industry-specific setbacks. Kiyosaki's emphasis on risk management through diversification challenges individuals to think creatively about how they can secure their financial future across different scenarios. The psychological aspect of wealth. Kiyosaki frequently discusses the psychological barriers that prevent individuals from achieving financial success. Fear of failure, negative beliefs about money, and a lack of self-confidence can all serve as significant obstacles. Kiyosaki encourages a shift in mindset, urging individuals to embrace a positive attitude towards money, view failures as learning opportunities, and believe in their ability to achieve financial independence. He also talks about the importance of setting goals and having a clear vision for one's financial future. This vision serves as a motivator, guiding individuals through the ups and downs of their financial journey. According to Kiyosaki, success in wealth building is as much about managing one's thoughts and emotions as it is about managing money. Social responsibility and giving back. While much of Kiyosaki's work focuses on individual wealth accumulation, he also touches upon the importance of social responsibility and the role of wealth in contributing to the greater good. He suggests that true financial success comes not just from amassing wealth, but from using that wealth to make a positive impact on society. Kiyosaki encourages successful individuals to give back through philanthropy, mentoring, and investing in ways that promote social well-being. This perspective adds a layer of purpose to wealth building, suggesting that financial freedom comes with the responsibility to help others achieve their own success. Robert Kiyosaki's comprehensive approach to wealth building integrates financial strategies with a deep understanding of the psychological and societal aspects of wealth. His emphasis on financial education, entrepreneurship, diversification, and the power of mindset offers a holistic guide for those seeking financial independence. While his methods may spark debate, the underlying message is clear. Wealth is accessible to those who are willing to learn, take calculated risks, and persistently pursue their financial goals. Kiyosaki's teachings, therefore, extend beyond mere financial advice, advocating for a transformative approach to life and business that prioritizes growth, resilience, and social responsibility. Thanks for watching. If you found this video helpful, please give it a thumbs up, hit that bell, comment, and subscribe for more content on the International CEO. See you next time.